Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bullish scenario where we're looking for a 5-wave impulsive structure to the upside to finish this green wave 5, after which we expect a bigger corrective structure to the downside. In this scenario, the common target area for your wave 5 is between the 1.236 and the 0.618, which is between 53.4k and 59.4k. The 1.236 is taken from the high to the low of wave 4 with the normal Fibonacci tool. The 1-to-1 is a trend-based fib extension taken from the low to the high of 1 to the low of wave 4, and the 0.618 at 59.4k is taken with the trend-based fib extension from the low to the high of 3 to the low of this wave 4. When we then zoom in to this wave 5, we are looking for an impulsive structure to the upside where wave 1 and 2 are finished and we're now in a wave 3. Wave 2 bounced inside the common target area for a wave 2, the golden pocket and the 786 around 51k, where we also had the additional support area. You can see we had the white box here between 50.8k and 51k, acting as a nice support with some local bullish CVD divergences as well, and then volume came in and we moved towards the upside. It is quite difficult to know exactly how far a wave 3 can extend. The best thing to do in such a scenario is to wait for a wave 4 to start. Something you do see quite often, however, is price reacting at the trend-based fib extension levels that I have on my chart, taken from the low to the high to the low. You can see we moved through the 1.618, but then at the 2 we reacted over here, moved down to the 1.618 for a retest, and now continue to the upside. It's very common for price to react at these fib levels, and the next one is at the 2.618 at 54.5k, then the 3 at 55k, and the 3.618 at 55.9k. As mentioned, the best thing to do is to wait for a range in a wave 4, and this range in a wave 4 should at least be similar in time to this wave 2, which is by far most common, as usually a wave 4 is even longer than a wave 2. When we look at the resistance areas to the upside, then we have a range value area high here at 54.7k, which is the value area high on the Bybit chart of the range of the year 2021. Above this level, we're looking for the blue box here, which is between 56.8k and 57.4k, and then we're moving to the upside here, 60.1k to 61.6k. Another thing to keep an eye on is the weekly gap. Over here we now filled the weekly gap at 53.3k, which was also the high of the monthly gap, and as mentioned, the moment you start to close candles, higher time frame candles in the monthly gap and in the weekly gap, there's a high probability to fill this gap. The next gap is to the upside here, 59.5k to 62.3k. The bearish scenario would be a flat structure. This is at the moment an alternative scenario, but as an Elliott Wave analyst, you always need a bullish and a bearish scenario. Here we're looking for a wave 1, 2, 3, flat structure in 4, and then continuation to the upside in a wave 5. So generally still looking for higher prices. What is not that nice, however, is the subdegree in this wave 3 over here. The details in this impulse to the upside don't line up as nicely, but in this wave 4 we are then looking for a 3 wave A, 3 wave B, 5 wave C. Common target for your wave B is the 1.236 to the 1.38 taken from the high to the low of this wave A, and the 1.618 is a less common target. Common target is between 53.5k, 53.9k, and the less common target, the 1.618 at 54.5k. And then we want to see an impulsive structure to the downside in a wave 4, and then continuation to the upside in a wave 5. The bullish CVD divergences that we had have now played out. The bigger bullish CVD here, higher low on price, lower low on the CVD target, this high has played out because we took the high. Also more locally here, it also played out, higher low on price, lower low on the CVD. The highs got taken. On the CVD chart, it looks like this. If I go to the 4-hour time frame, then you can see that here we had a higher low in price, lower low on yellow, and also lower low on blue, a bullish CVD, but also more locally with the drop that we had to the downside inside the target box support, higher low on price, but on blue it's very minimal. But we do have on the 15-minute time frame, that's the time frame I should go to, we have bullish CVD divergences here with the low. If you look at my horizontal cursor line here and you look to the right, then you can see that we have a little dip on the blue line below my horizontal cursor line over here, which was the bullish CVD divergence. Target this high also played out very nicely, and now we're looking for price to move towards the upside and wait for a range to form, and once a new range is forming, then we can reassess the CVD divergences. So if we then look at the probabilities of the different scenarios, then on the 1 hour time frame, not the 41-hour time frame, we are looking for price to move to the upside, and we are waiting for a range to form, right? Currently, the highest probability scenario is looking for a wave 3, but you kind of only know a wave 3 is finished the moment you get a range in a wave 4 that is at least quite similar in time than this wave 2. So that is then also what we're going to wait for and look for, waiting for a sideways range to form that is going to mimic the amount of time of this wave 2, as most commonly a wave 4 is longer in time than a wave 2. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.